everyone, welcome back to the Mortgage Reports. Today we're diving into a topic that comes up all the time when people are exploring reverse mortgages. Can I use a reverse mortgage to pay off debt? And more importantly, should you? From medical bills to high interest credit cards to personal loans that just keep piling up, a lot of homeowners hit retirement age carrying more debt than they expected. It's stressful, it's expensive, and it can make budgeting and retirement feel nearly impossible. But for many older homeowners, a reverse mortgage can be a powerful tool to relieve that pressure and create breathing room financially. Now in this video, we're going to walk through how a reverse mortgage can help you pay down debt, the pros and cons to consider, and most common strategies people use, and some real life examples to show what this can actually look like. So let's jump in. Question 1. Can you really use a reverse mortgage to pay down debt? Yes, absolutely. One of the biggest advantages of a reverse mortgage is that it lets homeowners 62 and older tap into their home equity without taking on monthly mortgage payments. And that money can be used for almost anything, including medical bills, credit card balances, personal loans, or even paying off an existing traditional mortgage. Many homeowners choose this route because the interest rates on credit cards and personal loans are often sky high, while the reverse mortgage gives them access to funds with no required monthly payment. By paying off high interest debt first, you immediately reduce your monthly expenses and free up cash flow in retirement. In simple terms, a reverse mortgage doesn't erase your debt, but it can give you the money to get rid of it yourself and stabilize your financial picture. Question 2. What kinds of debt do people usually pay off with a reverse mortgage? Homeowners use reverse mortgage proceeds to tackle a few common areas. Medical bills. Whether it's hospital visits, surgeries, prescriptions, or ongoing treatments, medical expenses add up quickly. A reverse mortgage can wipe out those bills so they're not hanging over your head. High interest credit cards. This is a big one. With interest rates often 20% or higher, paying them down with home equity can save thousands. Personal loans or consolidation loans. Instead of juggling multiple payments, a reverse mortgage can clean the slate. Existing mortgage payments is another one. Many people use a reverse mortgage to pay off their current mortgage entirely, eliminating their monthly payment and improving monthly cash flow right away. When used strategically, consolidating or clearing these debts can make retirement more manageable and far less stressful. Question 3. How does paying off debt with a reverse mortgage actually work? Well, there are two main ways. First, lump sum. You take an upfront amount of your loan proceeds and pay off the debt immediately. This is common for medical bills or large credit card balances. There's a line of credit as well. Instead of taking the cash all at once, you set up a reverse mortgage line of credit and use it only as needed. This is ideal for ongoing expenses or unpredictable medical costs. Now, either way, you're replacing monthly debt payments with a loan that doesn't require repayment until the borrower leaves the home or passes away. That alone can create a dramatic improvement in monthly cash flow. Question 4. What are the benefits and the drawbacks of using a reverse mortgage to pay off debt? First, let's review the benefits. You eliminate monthly payments on high interest debt. You reduce stress and free up income. You maintain ownership of your home. You're not required to make payments on the reverse mortgage. And your cash flow becomes more predictable in retirement. Now for some drawbacks. You are using your home equity, which reduces the amount left to your heirs. Interest accrues over time on the reverse mortgage. You must stay current on property taxes, insurance, and home maintenance. And it's not ideal for homeowners planning to move soon. Now, like any financial tool, it works best when it solves a real problem, not when it's used impulsively. So for many retirees, reducing debt Is that real problem? Question 5. What does this actually look like in real life? Here are 2 quick examples. Example 1, Linda, age 72, had $42,000 in credit card debt from medical costs and helping a grandchild through college. The payments were eating up her monthly budget. Using a reverse mortgage, she paid off the entire balance, eliminated the monthly payments, and finally felt like she could breathe again. Her budget went from stressful to manageable overnight. Example 2. Charles and Denise still had a $900 a month traditional mortgage payment when Charles retired, plus a $15,000 personal loan. With the reverse mortgage, they paid off both debts. Not only did they wipe out the personal loan, but they also eliminated their mortgage payment entirely. That freed up nearly $1,200 every month, money they now use for travel and savings. These examples show that a reverse mortgage isn't just about borrowing money, it's about creating stability, lowering monthly expenses, and improving quality of life. Question 6. What's the bottom line? Is using a reverse mortgage to pay off debt a good idea? Well, the bottom line is this. For many older homeowners, using a reverse mortgage to pay down debt can be a smart, life-changing financial move, as long as it fits your long-term goals. If you have high interest balances, medical bills you can't get ahead of, or a mortgage that's draining your monthly budget, a reverse mortgage can ease that burden and give you more flexibility in retirement. Just make sure you fully understand the costs, protect your long-term housing plans, and talk openly with your family or financial advisor. When used wisely, it's a powerful tool that can turn overwhelming debt into a manageable future. Now, debt can feel overwhelming, especially in retirement, but the biggest takeaway from today is that you do have options. A reverse mortgage can provide real relief by helping you wipe out high-interest credit cards, pay off medical bills, or eliminate a traditional mortgage payment that's been weighing on your monthly budget. It's all about using your home equity strategically to create more stability and flexibility in your day-to-day life. So just to recap, yes, you can use a reverse mortgage to pay down different types of debt. You can choose between a lump sum or a line of credit depending on your needs. Clearing debt with a reverse mortgage can dramatically improve cash flow in retirement. And like any financial tool, the key is understanding your long-term goals and using it wisely. If this video helped you better understand how a reverse mortgage can be used as a debt solution, give it a thumbs up, subscribe to the Mortgage Reports, and tap that notification bell so you don't miss future videos that take complicated housing topics and make them easy and practical. For an even deeper dive and more real-world examples, don't forget to check out the full article. The link's in the description. Thanks so much for watching, and I'll see you in the next one.